Hello everyone, this is Rising and welcome to my channel, The Quest for Wealth.
The first company in our list of the top 3 best Canadian dividend stocks is CI Financial Corp with ticker CIX. This currently trades at 24.11 Canadian dollars a share with a PE ratio of 10.58. This is normally seen as acceptable, and the beta of the company is sitting at 1.44. The beta then means this company or the investors of this company are more sensitive to news and information, thereby making the trading of the shares of this company aggressive than compared to the stock market in general. One of the most interesting developments with CI Financial is that it completed the acquisition of 3 registered investment advisors in the US, and these companies are Siegel, Bryant, and Hamel from Chicago. One is in New York and the other one is from Atlanta. The vision of the company is to create the leading private wealth platform in the United States. And the United States being the biggest economy in the world, this is quite a mammoth kind of vision. The acquisition of CI Financials of these 3 registered investment advisors in the US increased their total wealth management assets to approximately 280 billion Canadian dollars, which is equivalent to 223 billion US dollars. Aside from expanding the company's network in the US, CI Financial's expansion plans as well is to globalize the company, and currently the company has got a network of 10 registered investment advisors from the United States. Another important factor is that the company has been repurchasing common stock, therefore it has been buying its own stock, thereby further increasing and stabilizing the value of each stock and becoming more valuable. The company has not issued any common stock from 2019 until the trailing 12 months, and therefore this is a good thing because it does not dilute the value of the share. As a matter of fact, it improves the value. Now, let us have a look at the dividend history of the company. The yield of the company is recorded at 2.99%. Again, the PE ratio sits at 10.5 and the market cap sits at 4.86 billion. So this is the market capitalization of the company and this is the value of the company in the stock market. Dividend of the company from 2013, it was recorded at 0.095. By the end of 2014, their dividend grew to 0.105 a share, and 2015 it was recorded at 0.11, so that is a growth. There was a little bit of growth until the middle of 2017. Yes, the growth of dividend is slow, nevertheless there is the consistent growth. Since the end of 2018, the dividend of the company was recorded at 0.18 or 18 cents a share, and as per their forecast, they will be paying the same amount until 2022 March. Return on equity of the company is currently sitting at 31%. Imagine from 21% to 43%. By end of 2020, it sits at 30% and the trailing 12 months is 31%. This is absolutely remarkable numbers and these are good numbers. It's not every day that you will see that. Together with the return on invested capital, this as well are good numbers. As a matter of fact, for me, if I see for ROIC a number of 15%, I am certainly happy with that. But seeing 21%, these are absolutely good numbers. The company's current payout ratio sits at 31.3%. This therefore means the company keeps 70% of its earnings as retained earnings and uses that money to further develop the company. 31.3% is a good number. This is a healthy number. This is the insider trading. And if you will see here, there is more buy than sell in the last 7 months. William Holland is essentially buying more, and William Holland is the executive chairman of CI Financial. Here, you will find that back in June, he bought $1 million worth of shares, and then $500,000, another $500,000, and then another $500,000. Really, this guy is absolutely bullish Manulife currently trades at $25 a share. Its highest valuations were recorded back in October 2007 at 43.79, and right now it sits at $25.14 a share. It certainly is not near its highest valuation yet. The basic earnings per share been proven to have been growing as well. There's a bit of choppiness here from 2013 and 2014. Nevertheless, the company recorded continuous growth here from 2018, and then growth in 2019, and then growth in 2020. Cash flow from operating activities was sitting in 2012 at 11,086,530,000, and the net income was 1,692,990,000. What you will notice here is that cash flow from operating activities is remarkably higher than the net income. This is a remarkable feat here, and this is a good number. What I believe is worth mentioning with Manulife is that it does not have any current liabilities. Since 2015 until 2020 fiscal year ended, there had been no current liabilities for the company, and therefore making it an absolutely liquid. The current liabilities are the liabilities or debt of the company that it needs to pay in the next 1 year. And here you will find there is none. The total liabilities of the company versus the total assets. Total assets is higher than the liabilities. This is almost a 1-to-1 ratio. This therefore means that the company has got $1 worth of asset towards paying $1 worth of liability. This is the historical outlook from 2010 until 2021 on the payout ratio, stock price, and the actual cash paid to the shareholders as dividends. Now, from 2010 until 2021, we see here that there has been consistent and constant growth paid to the shareholders. What's interesting here is that in 2014, the price of the company's stock was sitting at $14.94 a share. The payout was at 0.37 cents a share. And then the company's stock dropped to 10.19 in 2016, but the payout actually did not drop. It increased to 0.41, and this is the same here. 2020, back in May, the price of the company dropped from 11.21, and recently it was at 17.98. But even then, when it dropped from 17.98 to 11.21, the company's dividend did not drop, but they actually grew the dividend to 0.73 from 0.69. And this is what we want to see when it comes to dividend paying companies. We want the company to be able to sustain their dividend pays through the operations and cash earned by the company and not through the stock market. The payout ratio of Manulife sits at 30.77%, and the rest, which is about 70%, is retained by the company to further grow the company's operations and business as a whole. Great-West Lifeco. Now, this company trades at $38.89 per share with a PE ratio 11.18. This is below the average PE ratio these days. This could potentially mean that the company is undervalued. The dividend yield of the company sits at 4.50%. This is the dividend growth history from 2011. Let's have a good 10-year period of the dividend growth of this company. And if you will see here, the cash amount sits at 0.3075, almost 31 cents to a share. And that figure actually was stagnant for over so many years until 2014. And then come 2018, the figure grew to 0.389 or almost 39 cents to a share. And fast forward to June 2021, 438 to a share. As you can see here, there had been growth, the insider trading within the company. One of the biggest insider trading, as you can see here, is from the holdings of the company in the US, and that amounts to $12,259,181. And another huge transaction was with Paul Mahon. a senior officer, and that's almost $1 million there. So this guy seems to be bullish. Then the PE ratio of the company is only sitting at 11.2, and this really is quite a good company. Now, another thing that we have to understand is the debt of the company, and the debt of this company is remarkable. It's only 2.84 years worth of the company's earnings, and that in itself makes the company truly worth to look at.
Thank you very much indeed for watching this video. I hope that you gained value in this video and in my channel as a whole. And if you did gain value in this video, please like, share, and subscribe. And I will certainly see you, hopefully, in my next video. Thank you very much.